America has record levels of debt, expensive living costs, and growing economic pressure. So why hasn't the US economy collapsed? Start with the obvious problem. America's federal debt has passed $40 trillion. And the cost of servicing that debt is becoming a bigger part of the government's financial burden. Because debt isn't simply money disappearing into a hole. US government debt is also held as an asset by investors, banks, pension funds, and institutions around the world. Then there's the dollar. The US doesn't operate like an ordinary household that must earn dollars before spending them. Its currency sits at the center of the global financial system. The ports of Shanghai. And then there is the American consumer. Even when households complain about affordability, spending has remained a major engine of the economy. Here's where the story gets interesting. In the second quarter of 2026, headline GDP growth slowed to about 1.5%. But underneath that number, trade demand was much stronger. One major reason is investment. AI infrastructure has become a huge source of business spending, from data centers to computing equipment. That investment is supporting activity today, while investors hope it creates productivity tomorrow. This points to something deeper: productivity. If American companies can produce more with the same amount of labor and capital, the economy can grow without simply relying on more workers. The labor market also matters. It isn't perfect, and hiring has cooled from earlier highs. But the system has continued producing jobs and income, keeping money circulating through the economy. And behind all of this is the Federal Reserve. Its job is to balance inflation and employment while trying to keep the financial system functioning. That gives policymakers tools that many other economies simply don't have in the same form. Then there's the financial system itself. Banks, credit markets, and payment networks allow money to keep moving between consumers, businesses, and investors. When that circulation continues, the economy can absorb a surprising amount of pressure. But resilience doesn't mean everything is fine. America's debt is becoming a serious long-term vulnerability. So what could actually break the system? Probably not one problem by itself. The real danger is several problems arriving together: geopolitical shocks, the financial leverage, declining consumer confidence. So why hasn't America collapsed? Because beneath the problems is an enormous economic machine that is still functioning. Consumers are spending, businesses are investing, technology increasing productivity, financial markets are working, and the dollar remains deeply embedded in global finance. But here's the important distinction. Surviving today's pressures doesn't mean America has solved tomorrow's problems. The debt trajectory, affordability pressures, and inflation risks still matter. America hasn't collapsed because its economy is more resilient, more interconnected, and more financially powerful than the headlines often suggest. But the real question isn't whether America can survive today's problems. It's whether it can keep growing fast enough to outrun tomorrow's.